welcome to All You Need to Know. The big news coming in this morning. Ratings agency Moody's has raised India's credit rating by a notch from Baa2 to Baa2 from Baa3, and that's a significant update, and it's coming after a long time. It's also the fact that the Indian government has been pushing for this for a long while. The outlook on the rating, as is normally the case, has been moved to stable. That happens when the rating is changed. But what are the factors that have worked in favor of India? Just reading the headlines, continued improvement in economic and institutional reforms will, over the medium term, enhance India's growth potential. That's essentially what Moody's has said. It has also said that it will contribute to a gradual decline in the government's debt burden. What are the reforms that Moody's is referring to? Well, first up, it's the goods and services tax. That's the headline. Also, improvements to the monetary policy framework have been mentioned. Measures to address the non-performing assets in the system. Remember, the bad loans addition in the last quarter was the slowest in several quarters. So all of those factors taken together. Also, there's a mention of the effort to shift to a formal economy. The work in progress has also been talked about, that it's going to be a positive for the country. Among them, of course, is the land reform in the form of RERA. They've also said that there's a lot of work to be done to maintain the rating. Also, they've talked about potential upgrades and various factors that could potentially lead to a downgrade. We'll, of course, bring you all the details of that over the course of the day, and also we'll bring in experts to tell you what this essentially means for the country and for the markets. But for now, let's go to Darshan Mehta and Agam Vakil to set us up for the day's trade. Darshan, first to you. You have the trade set up for the day.
Yes, and ever since the Moody's report that came out, the SGX Nifty has managed to double its gain. In the morning, it was trading up by 30 points. Now it's up almost close to 80 points. So there is significant amount of traction that's happening. Asian markets also trading much stronger. The Japanese market, the Hong Kong market, all of them are trading stronger. ADRs also strong trade. Infosys and Wipro gained almost more than 2.5% in trade. Vedanta ended up over 2%. So that's the broad queue that's coming in. ICICI Bank was also up close to 1.5%. So the overall queue that we're getting in from the ADRs is positive. As far as the commodity pack is concerned, crude is trading with a positive bias after 3 days of losses. OPEC indicated that they should extend. Saudi Arabia has indicated that OPEC should extend the oil cuts. As far as commodities are concerned, oil actually is headed for the first weekly decline since October. As far as base metals are concerned, we close for the base metals on the LME. Just take a look at some of the base metals. Nickel was down almost 2.5%, almost 3%. Lead was down over 1%. Copper was down 0.5%. Most of the other commodities managed to end flat. Aluminium and zinc were down almost 0.2%. Tin ended flat. As far as COMEX copper is concerned, it's trading with a positive bias. But even if you're looking at trade that's happening in Shanghai currently, aluminium, steel and copper trade weak in China currently. Rubber is trading flat after a 2-day losing streak. So that's the commodity view that's coming in. As far as gold is concerned, gold has gained for the second straight session. It's moving flat, but it's with the positive bias. FI sold in almost 447 crores in the cash market. This is the NSE provisional data. DIs have bought in almost 847 crores. As far as the month to date is concerned, FIs have bought in almost 14,000 crores in the cash market. Should probably increase with the Moody's rating upgrade that's come in, and DIs have bought in another 3,000 crores in the cash market. So significant amount of traction that's happening. As far as the Nifty is concerned, we ended above the 10,200 mark. The India Volatility Index, so the VIX, fell down significantly. It was down 8%. FMCG and IT contributed the most, but most of the sectors ended with positive bias. The Nifty was up almost 100 points. It was the heavyweights, Infosys, Reliance, SBI, ICICI Bank, that contributed significantly to the Nifty moving up almost 100 points. But Agam, what's the FNO situation like?
Well, Darshan, after a small bout of weakness, we have finally started to see some positive moves. So as far as the Nifty is concerned, we've seen the Nifty move up by 96 points. And with that, we've seen short covering coming around. So when it comes to the futures have declined by as much as 4%. Nifty Bank as well, the same thing, whereby the index has moved up by as much as 0.1%. We have seen unwinding worth 2% as far as its open interest is concerned. With that, predictably, the India Volatility Index has also fallen, this time by as much as 5.7%, along around the mark of 13.5. And in those lines, we've also seen the Nifty put call ratio move up higher because of the fact that Nifty is also moved up higher to around 1.2 from 1.13. In terms of changes in open interest, as one might expect, we have seen unwinding in a lot of these calls. So the 10,300 and the 10,400 calls, the unwinding, more writing coming along in the 10,200 and 10,100 puts. In terms of changes in your F&O ban as well, we have two counters moving out. So Indiabulls Realty and Just Dial, we are looking at fresh long positions building up in Page Industries, where the open interest has surged by as much as nearly 29%. Similarly, Voltas has also seen a good amount of accumulation towards longs, with open interest moving up by as much as nearly 28%. So cues for now looking very positive, and I'm sure that Darshan also has some more good news coming in, at least as far as the CLSA's point of view is concerned, Darshan.
Yeah, so CLSA does believe that there could be a little bit of correction that will happen in the global markets, and that could give an opportunity for long-term investors to hedge their portfolio, but that will also provide a lot of opportunity for FIIs to actually start accumulating shares in India and China. One of the big missing links, as far as Chris Wood was concerned, was the bank recapitalization, and that is actually plugged in because of what has been indicated now in terms of the bank recapitalization. They believe that there is light at the end of the tunnel as far as the banking stocks are concerned now. As far as valuation is concerned, India is no doubt trading expensive. It's trading at almost 17.7 times on a 12-month forward basis compared to a 10-year historic average of almost 14.8 times. But they're saying that the aggregate corporate profits as a percentage of nominal GDP have declined to 7.1% from FY18 to close to 3% now, and that is something that could boost the profits going ahead. Foreigners will now be inclined to buy more of the Indian market. Now, as far as changes to the model portfolio is concerned, housing finance companies, they are extremely bullish. So as far as the entire model portfolio is concerned, 12% of their model portfolio is housing finance companies. They've removed the 4% weightages that they had in Z Entertainment, as well as and that has been given to Bharti Airtel. The 4% weightages of ACZ has been removed and given to Dalmia Bharat. A 3% reduction in Mashan Iron and Steel was given to Vedanta, and 1% was reduced from Maruti, and it was given to Godrej Properties.
Stock of the day is Matrimony. Good set of numbers coming in from the company. If you look at the revenue, that's a 13% upside that we're looking in terms of the quarterly sales at 83.6 crore as compared to a number of nearly 73.6 crore that we've seen in the base quarter. Well, the profitability, that has also improved quite a lot at 64% to a figure of nearly 19.2 odd crore as compared to a figure of nearly 11.6 crore that we saw in the September quarter of the previous year. Also, operational performance, that's a good beat there itself. Also, almost a 40% uptake that we're seeing there at 20.5 crore as compared to a number of nearly 14.6 crore in the corresponding quarter. Margins have expanded to 25 odd percent as compared to nearly 20 odd percent in the corresponding quarter. So what goes behind the good set of numbers? Well, we have seen good revenues along with your operation efficiency and also decline in the bottom line expenses, which have aided the earnings of the company. Finance cost, for that matter, that has come down to 62% to 58 lakhs for that matter, not even a crore for that matter. And if you look at the depreciation, that's fell by 13 odd percent year on year basis to 2.33 crore as compared to a number of nearly 2.67 crore in the September quarter. Besides that, there's also a sharp uptick in the other income, which has risen up nearly 105% to 0.78 crore as compared to a number of 0.4 crore in the corresponding quarter. In terms of the other highlights for the company, well, the company has added 8.7 lakh profile during the quarter, and 52,000 success stories have so far been reported by this company in the span of first half of the financial year. If you look at the shareholding pattern there, well, it's a good mix. If I was supposed to further highlight about the prospects, well, 64% of that have been posted by the prospects, 17% have been added by the parents, and nearly 22% of the prospects file have been added by the siblings on the website. If you look at the shareholding pattern, well, that's a good mix out there. It's nearly a promoter holding of nearly 51%, and the public holding nearly stands at 49%. With that, let's toss it over to Jayesh and Saloni for commodity and currency market updates.
Thanks for that, Nikki. In fact, the entire commodity space has not had a good week. So LME base metals closed weak overnight. In fact, nickel closed lower as much as 3%, and also copper, aluminium, zinc, which also took a beating of about 0.5% each. The LME base metal index is on track to post the second weekly loss, which is down about 1.3% for the entire week. Moving on to gold prices, we've seen some bit of stability come about for gold near the 1280 mark. In fact, the entire pack did well. So you look at platinum, palladium and silver, which also gained in trade. Moving on to oil prices, that is where we've seen a lot of traction. WTI has in fact slipped near the 55 mark, and Brent is on track to post the first weekly decline after 5 straight weeks of gaining. ABN AMRO has come out with a note in which they have pegged the target of WTI at 70 and Brent at 75 by the end of 2018. But on to the big news of the morning, Moody's has upgraded India rating. Saloni, how is the non-deliverable market reacting to that?
So Jayesh, dollar rupee is trading 30 paise higher at 64.98 levels against the dollar in the non-deliverable forward market. Now it indicates a stronger rupee for Indian rupee in today's trade. Now remember, the rupee surrendered two-day gains yesterday, and it dropped 11 paise to close at 65.32 levels against the dollar. The home currency has depreciated close to 1% this month, making it the worst performing currency in the Asian market. Now do remember that with the crude factor already playing a part in rupee's role, two global banks, that is DBS and Credit Suisse, have already cut their rupee estimates for this year end. On the global front, dollar index is trading lower despite approval of tax bill from the House of Representatives. It was largely pressurized due to disappointing initial jobs data, which came in below estimates. Elsewhere, euro snapped its two-day losing streak, and it is now trading 0.2% higher at 1.1780 levels against the dollar. Moving on to bond market, the 10-year benchmark yield ended 4 basis points higher at 7.06% yesterday. And lastly, global funds increased their rupee debt holdings by approximately 750 crores according to NSDL data.
Well, amongst the stocks that we're tracking today includes Ashok Leyland, where they said they're looking to acquire 4.68% stake in Hinduja Leyland Finance. In fact, the total consideration for this will be about 225 crores, which will take their stake to about 61.9% from the current 57.22%. That apart, we're also tracking PVR, where it has said that it will acquire a minority stake in IPIC, which is IPIC Gold Class Entertainment. Now, they haven't disclosed the sum for this acquisition, but this is a US-based luxury restaurant and theatre company, so it will give PVR some exposure there. That apart, there have been tweaks in the foreign investment limits for a number of companies, and that's what RBI circular yesterday said. So the FPI investment limit in ICICI Lombard has risen from 24 to 49%, in Edelweiss Financial from 40 to 49%, and in Petronet LNG from 30% to now 40%. So we could see some positive reaction in some of these names today. We're also tracking some stocks on the back of earnings. So we have Ahluwalia Contracts, where revenues grew 50% and net profit jumped 30% for the quarter, and this was along with 100 basis points improvement in the operating margin as well. Honda CL Power, where revenues grew 5% but net profit fell about 10%, so slightly on the weaker side. And lastly, we are also tracking Thangamile Jewelry on the back of bulk deals, where Old Bridge Capital, this is Kenneth Andrade's, which bought 3.6% stake in the company yesterday from the promoter. So these are some of the names which could see some reactions today.
Former Revenue and Expenditure Secretary Mr. N.K. Singh is likely going to head the 15th Finance Commission, a top government official told Bloomberg Quint. The constitution of the 15th Finance Commission will be notified soon, the official said. The Finance Commission is set up every 5 years to review finance, deficit and debt levels of the states and the centre. The Finance Commission also recommends a devolution formula through which taxes are divided between states and the centre. The recommendations of the 14th Finance Commission are valid from 2015 to 2020, and recommendations of the 15th Finance Commission will come into effect for 5 years starting April 1, 2020.
Well, talking about HDFC Standard Life, it is all set to list its 8,700 crore IPO today, thereby making it the third life insurance company to list on Indian exchanges after ICICI Prudential and SBI Life. Now, in terms of subscription, the IPO has been oversubscribed by close to 4.9 times, with QIB and HNI portion subscribing over 16.6 times and 2.3 times respectively, while the retail portion was subscribed close to 94%. Now, in terms of valuations, if the stock lists exactly at the upper end of the price band, that is 290 rupees, it will command a valuation of over 58,000 crore. However, if the stock lists at a discount of 270 rupees, the market cap would be around 54,000 crore rupees. If the stock lists at a premium of 310 rupees, the market cap would be around 62,000 crore rupees. Now, given the market cap scenario, the price to book will vary in the range of 12.3 to 14.1 times. Now, when you compare HDFC Life with its listed peers, it has the lowest end-date value of close to 14,000 crore rupees for the year quarter ended September 2017, while the AUM, that is asset under management, is close to a lakh crore rupees, which is again the lowest among the top two players. However, it grew at a faster pace of 23.3%, which is the highest as compared to both these listed peers. Now, in terms of valuations, HDFC Life issue looks a little expensive when you compare it with ICICI Pru and SBI Life. Given its price to end-date value, it trades at 4.1 times, while the price to book value trades at 13.2 times, which is the highest among its listed peers.
On brokerages, first we have is Nomura on Just Dial. Now they have maintained their buy rating but have hiked the target price to 635 from 590. Now the Just Dial has renewed its focus on its core search business, and the brokerage is positive on the stock on the back of improved traffic growth, stable realizations and operational efficiencies. Now Just Dial remains the most cost-effective SME advertising platform in India, with scope of coverage into Tier 2 and Tier 3 cities. Now though there's a risk of competition coming in from Google and other vertical players, but the brokerage is also positive and believes that this could be a trigger for the stock if the company is able to bring in some strategic investor. Now they're expecting the EPS of the company to grow at a CAGR of 19% over FY17 to FY20, and is expecting the revenue to go at a compounded annual growth rate of 10% over FY17 to FY19. Second, we have a CLSA and ONGC. Now, in the last 7 trading sessions, ONGC has corrected by around 10%, which has brought down the company's market capitalization by near $4 billion on the fears of default from a Venezuela government. Now, according to CLSA, this is an overreaction because they expect the worst case impact to be close to $1.1 billion, which is just 5.6 rupees per share. Now, as this correction is an overreaction, CLSA is saying that this fall in share price could be a buying opportunity because ONGC is now pricing in sub $50 per barrel Brent. Now, according to CLSA, there could be a re-rating as the subsidy uncertainties are behind, and the company is now delivering on the production growth. Now, ONGC is also the cheapest global exploration and production stock on most key parameters. So, all in all, they have a buy rating on ONGC. So now let's listen into the Gujarat discussion that we had last night on the upcoming Gujarat elections.
As per survey, everything is okay. Then why the agitation of the Patidar agitation is there? Why OBC agitation in Gujarat is there? Gujarat is a prosperous state. Why Dalit, they agitating for their rights? Why traders traditionally in Gujarat since last 40 years? The traders were supporting to the Jansangh and BJP since last 40 years. This time, the traders came out in lakhs of people. They joined in rally. They have raised the issue against Prime Minister, against Amit Shah and everyone. So, if their policies are popular, normally the traders would not take, participate in rallies and other agitational programs. Why they are agitating over there? Our Vice President Rahul Gandhi visited, the cloth market is in Surat. He is meeting only 150 people only in the roundtable conference. But outside the room, almost 10,000 traders were shouting slogans against BJP and Narendra Modi. Why such scenario have been happened? If their policy is good, why GDP growth rate is come down from 9% to 3.7%?
Let me bring that question to Jay Narayan Vyas. Is there a sense of nervousness, Mr. Vyas, considering the high octane pitch in Gujarat till even about 6 to 8 months ago? Most people with their eyes shut would say that Gujarat is a cakewalk for the BJP. Even you may admit today that it doesn't seem to be as easy.
Let Congress not be in a complacency to take this agitation as a community agitation or a local agitation. The agitation which is today, right from Haryana, Jats to Gujars in Rajasthan to Patidars in Gujarat to Marathas in Maharashtra, is the agitation of the declining returns from the agriculture and 99% of the farmers being pushed closer to the poverty line because of the fragmentation of the agricultural lands. So this is an issue, the agitation is by a farming community, not a particular community. Incidentally, the majority community takes the brunt of the burden, but it is basically farmer who is put into the hopeless situation, and that certainly is not done because of the BJP's policies.
There is no doubt, strong anti-incumbency against the government, because party has been ruling the state for over 2 decades, and now the same party is ruling at nationally also. So there are, and there is a overall slowdown in the economy. Manufacturing sector is not doing that good. There is a farm distress also. So there is, anti-incumbency. Having said that, the point is that will the Congress be able to, exploit that sense of anti-incumbency in Gujarat? Because Congress, Mr. Gandhi comes and he does get a good response in terms of crowd, but organizationally Congress is very poor. It hardly exists in the urban areas. So how Congress will be able to, take benefit of the anti-incumbency factor will remains to be seen.
Now, over the course of the day, there's going to be a lot of incisive discussion on the Moody's rating upgrade and the implications for India and the market, so stay tuned for that. There are also a few stories that you should consider reading on the website bloombergquint.com. Here are just a couple of them. The government's strategic divestment is proceeding as per plan, and it won't rush through stake sale proposals, including for Air India. That's according to Neeraj Kumar Gupta, the Secretary of the Department of Investment and Public Asset Management. Now, what if you could travel from Mumbai to Pune faster than you can get a pizza delivered to your home? Well, that's only if a preliminary study to be conducted by Richard Branson-backed Virgin Hyperloop One yields positive results about the viability of connecting the two cities with a hyper-speed transport system. And here's what Mayuresh Joshi of Angel Broking has to say about the outlook for the markets and the stocks that he is betting on.
Specialty chemicals is something that I continue to like, Neeraj, and out of that, actually Pushkar is something which looks very, very interesting at this point of time. It is India's largest manufacturer of K-acid, and it is forayed into the dyes segment as well. So it is forward and the backward integration at a single location unit is going to optimize cost. At the same time, it uses its internal produced steam from the acid plant, and that saves fuel costs. It got its own logistic fleet, and that's the reason it saves on its freight costs. Having said that, I think the kind of top line growth that the company has exhibited of 14%, the management is very, very confident of posting a 30% top line growth in the year to come. So largely you're looking at a top line of anywhere between 400 to 425 odd crores. The margin should sustain at 17% because of the efforts, as I said earlier, being taken by the management. And again, the global situation with Chinese curves, both in terms of emission and effluent discharge, is clearly putting a lot of emphasis in terms of Shri Puskar's volume growth as well as realizations, which should be on the better side. The EBITDA growth has been in excess of 24 odd percent. They'll be able to maintain their margins at 17, 18 odd percent. And again, I think the bottom line growth has been quite stupendous at 43 odd percent. Again, from a debt equity perspective, I think it's net cash on the balance sheet, which is very, very rare. And again, the kind of capex that is required and the cash flow from operations, it should suffice as requirements in achieving and bettering those return ratios by at least 300 odd pips over the next year. So I think, like Shri Kelkar, very, very interesting stories, niche story. I think it should do well, but investors have to buy this on declines in a staggered way. My own sense is that the markets might consolidate, and what you're probably looking in terms of headwinds, both from crude, it should not sustain, as I said a few days back, because the supply from shale will probably ensure that the capping of prices happens. So I don't see this to be a over worrisome factor for the markets. But what they'll probably look at is the Gujarat elections, which are due in a few weeks' time. Until that point of time, I think the consolidation in the markets might continue. So to put it in other words, I think I'm not expecting a huge correction onto the markets. Any correction which is of a significant nature can be taken to pick up qualitative stocks in the market.
Well, that's all you need to know going into trade today. Do stay tuned. Up next is Indian Open at 8 a.m. On the top of the show is the big story, the rating update of India by Moody's. Thanks for watching. This is Bloomberg Quint.